Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and over the next few minutes, we're diving into the latest escalation in the global trade landscape, one that's reigniting old anxieties and sending shockwaves across financial markets worldwide. The world woke up once again to the headline: the United States under President Trump has unleashed a fresh series of sweeping tariffs. New duties are being imposed with immediate effect. A 35% tariff on goods flowing in from Canada, sharp 30% tariffs on both Mexico and the European Union, and a headline-grabbing 50% tariff on imports from Brazil. These decisive moves come not as isolated incidents, but as part of a rapid-fire sequence of trade actions, surprising both allies and rivals alike, and leaving businesses scrambling to adjust. The impact across global markets has been both swift and profound. Firstly, the FX markets. Foreign exchange desks lit up as currencies of America's key trading partners stumbled. The Canadian dollar, the euro, and the Mexican peso all fell sharply, reflecting investor unease and the flight to safety. Meanwhile, the US dollar rallied strongly, showing its safe haven appeal as markets adopted a risk-off posture. Secondly, equity volatility. Stock markets from Frankfurt to Tokyo saw red as equity investors reacted to the sudden erosion of global trade stability. Major indices fell, with especially pronounced volatility in sectors linked to cross-border manufacturing and export-heavy industries. For many, this was a stark reminder of the deep interconnectedness of global supply chains. And thirdly, commodities. The impact wasn't limited to the above asset classes. Key commodity prices, especially industrial metals and agricultural products, suffered swings as investors anticipated supply disruptions and retaliatory measures. Beyond the trading floors, the repercussions became evident in real-world trade data as export volumes declined. Initial reports reveal an immediate pullback in exports from the Eurozone and Japan to the US. Businesses are facing higher costs, growing uncertainty, and early signs of orders being cancelled or postponed. The Eurozone in particular is witnessing notable contraction in its trade surplus with the United States as demand weakens under the weight of tariffs. Japan's export-dependent sectors have also come under pressure, fueling debates in Tokyo about possible countermeasures. Business uncertainty jumped as companies began to revise their forecasts, with many warning of margin pressure, potential layoffs, and postponed investment plans until there is more clarity on the trade outlook. All of this combines to resurrect a familiar risk: a full-scale global trade war. These new US tariffs have rekindled threats of tit-for-tat retaliation from affected nations. The lessons of past tariff battles loom large, reminding us how fast isolated actions can spiral into systemic challenges, threatening global growth and cooperation. Policymakers are now facing enormous pressure to respond, to negotiate, and perhaps most importantly, to restore a measure of predictability in a world where cross-border commerce is part of daily business for millions. The coming weeks will prove critical. Will the escalation subside, or are we witnessing the opening salvos of a broader conflict that shapes the economic landscape for years to come? One thing is clear: renewed trade tensions are back on the front page, and the world's markets and its governments will be watching every move very closely. And that wraps up today's episode. Thanks for joining me as we navigate the twists and turns of today's markets. In the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.